Anybody can make a fortune short term. What happens is most people quit. And the reason this space is interesting, it's 50 times more difficult than everything in the old world.
How many times until you learn?
Many. The only way to survive, there's only one way. You buy it and you forget about it.
Dan Tapiero, the founder of 10T Holdings and One Roundtable Partners.
With over $1.5 billion invested in Web3 and digital assets.
A former global macro investor, he's now all in on crypto's $10 trillion future.
What's the day that you learned what calculated risk meant?
In 1994, I had a very big bet on Japanese government bonds. I was thousands of % return. And in 1 week, I lost half of everything I made in the previous year. The idea of never being in a position to lose enough that you can't come back. So I give up a little bit of the upside to have control of the downside.
How do you reflect your conviction in your personal liquid portfolio in terms of crypto?
I have Bitcoin and ETH.
How much of that is that in your personal portfolio?
I have a pretty big exposure in the funds. I have exposure in some gold, but the reality is my exposure to this space, liquid plus the funds, it's over 50%.
You own a collection. Can you draw a parallel between old master paintings and NFTs?
The old masters world has died. No one under 40 years old is buying old master paintings. The prices don't move. The young people have no interest. NFTs really more are about attaching digital value to something that's creative in the analog world.
During these 25 years in the macro world, you worked with the top 5 investors.
I think.
You sat beside Steve Cohen, the famous hedge fund manager worth more than $20 billion. What did you learn from him that you couldn't have learned anywhere else? 69% of the people who watch this podcast have not subscribed. If you enjoy this show, if it provides value to you in one way, shape, or form, can I please ask you a little favor? Can you click that subscribe button, give this video a like, and leave a comment down below? It helps this show more than you can imagine. My goal is to bring the absolute biggest and brightest people on this channel, and the best way to get there is to have all of us rally together and build the When Shift Happens family. Thank you.
Before I lose, I'm an older guy. There's only so much amount of time that my brain works. So you're catching the middle part of I have my morning, I have my now, but I would never do this at like 5 o'clock. It doesn't work the same way.
You also wouldn't do it too early in the morning?
There is no morning for me.
Because you sleep.
8 hours every single night, no matter what.
Yes, you told me. Yes. You told me if I don't have my 8 hours, I take the day off.
Oh, I take the amount of time off that I need to get to sleep. So, like last night, I was out with Pascal from Ledger at 1:30 at night. Okay, so I woke up at 9:30.
Yeah.
Yeah.
That's the way to do it.
Going at 1:30 at night and then waking up at 7 to do a phone call with somebody. No, I'm too old for that. I did that in previous years in the markets and dealing with that kind of thing. Anyways, do we get going or?
Yeah, we're on.
Okay. Oh, I didn't know that.
We're on.
Are you going to edit at all?
We're going to edit some part, obviously.
Oh, I had no idea that we were on.
I like the organic start.
Yeah. So the question is in the morning. Yeah. So look, bottom line, my first job really was at Tiger Management in the early 90s. And my job started at 3 a.m. I was the European bond and currency analyst and trader, and I was young. I had a lot of energy. I used to work out. When I was playing water polo at Brown, I used to work out. We had 2 workouts. One went from 6 a.m. to 8 a.m., and then we had one from 4 p.m. till 6 p.m. every day. So I could do the early morning and just power through it. And then so when I got out of school, there was a position for, there's a crisis, ERM crisis in Europe, lots of activity in bonds and currencies. So they needed a young guy to actually do the transactions and execute during European time. So for me, it was like, oh, no problem. But even though I went in at 3 o'clock, I would leave it around noon, 1 o'clock. I used to go to bed at around 6 p.m., and I would wake up at 2:30. I still got my 8.5 hours of sleep, no matter what.
Yeah.
And I feel without that, you're always functioning suboptimally.
Absolutely. For me also, I'm 33, but I also completely organized my life like that since probably 6, 7, 8 years, because I realized
if my brain doesn't work, I cannot make the right decisions. If I cannot make the right decisions, the impact is much less. And it's not only with work, it's also with relationship, being present, having your brain working.
Can't be creative. It's impossible to be creative, to think out into the future without that clarity of mind. And look, there's no faking it. There's no, when you're young, you can maybe power through it. You have an extra cup of coffee. Some people do drugs. I never did drugs. So it's not a thing. But, at some point, if you're not getting that sleep, then over time you will degrade. And am I supposed to be looking at it this way?
Here. Some people go as far as saying that even coffee is a drug, right? And removing coffee from their life.
Yeah, I mean, everything can be, then sex is a drug, and all these things that are addictive are drugs. I mean, I don't know. Eating pizza once a day because you love it, that could be, anything that's addictive. I think that as long as you can balance things, you make an attempt to balance things. I had a period in my life where I was very overweight after college. I used to work out 4 or 5 hours a day, and then all of a sudden I'm still working out, an hour a day, but it's not the same intensity as I used to. And I gained a tremendous amount of weight, gained 50 pounds between graduating college, 22, 23, and age 30, around when I was married. I was the heaviest, I would say. On my wedding day, if you see a picture, you don't recognize me. And I think, I was still working out, but it was very unbalanced, my diet, and maybe my sleep wasn't great as much. But when I later on started to lose weight, I started cutting things out that my body couldn't handle. So dairy, for instance, was a terrible thing for me because, if you think about it, milk products are for a baby cow to be nourished by a mother cow. It's not for a 40-year-old man. I don't need my bones nourished anymore. But I never cut anything out 100%. I cut out sugar dramatically, 90%. I feel like if you cut off 100%, you then crave it and then you binge it. So if I see a beautiful pizza in front of me, I'm going to have a slice, right? But cutting it out 90%, I then lost those 50 pounds 20 years later. And I just feel like you can't function, you can't be productive, carrying around an extra 50 pounds. It's impossible.
Absolutely.
So anyway, and it looks like you're very fit too. You must be working out every day.
4 or 5 times a week. But 5 times in 1
That's
hour.
perfect.
It's just 5 times. It's just
that's
5 hours
perfect.
a week. People are like, "Oh man, you must."
Yeah.
I'm like, "Yeah,
Yeah.
that's 5 hours in a week. Like,
Yeah.
there's no excuse, right?"
No.
And I've always been like that. And I remember when I was 23, starting my first company, talking to CFOs who were 55, 60 years old, who were basically potential clients. That's the thing they would tell me. They would be like, "You look so fit."
Yeah.
Like the respect from like looking fit, even if
Yeah.
you're trying to do business stuff, I realize is actually very important. So, yeah. Who are you?
What do you mean, who am I? Like with what? It's such a broad question.
That's on purpose.
I'm like so many in my mind. I'm so many different things. So that's why it's hard. You want me to, on the spot, order them in terms of priority so that I can give you something clear. I guess at the root of everything, well, if you broaden it out, who am I? I mean, at very first, I'm a father and a husband. That's at the very first. I mean, my kids are very important to me, even though, they sometimes don't want to have anything to do with me, or they're busy, or I can call them and they won't respond. But, it's different. I feel like being a father, there's a very big difference between men who are not fathers and men who are fathers. Very difficult. I don't want to say to trust somebody who isn't, but they just don't have the life experience. And, my son is also, my oldest son has some difficulties. He's a little bit on the Asperger spectrum and, it's not very straightforward. And my wife and I spent years and years dealing with, his issues, and he's improved a lot. He just graduated from college with a degree in history and political science. I mean, he's grown tremendously. But the life experience that, my wife and I both, and my two other girls, his sisters, have gone through, with that, shapes you, gives you perspective, and it's just, you have a different life experience owning that responsibility. And it might be forever. He's doing wonderfully now, but, you don't know. And then I'm married 26 years. And so, this is certainly one of the biggest accomplishments of my life. My parents divorced when I was young. And
How did you leave that?
I'm sorry?
How did you leave that? The divorce?
Well, I was 8 years old, so I was not happy. I mean, but it worked out for the best in a sense, because my parents were not really compatible in a way. Their personalities were not really compatible. And it happened that the two families knew each other and basically got together, and, this is the early 1960s. And so, they were from a similar background, sort of, and the families knew each other from business, and, they're about the same age, but there wasn't as much of a personality fit. So it wasn't something that was going to last, but it also made me very independent. I used to spend my childhood years going back and forth from New York, often to Paris. My whole father's family lived there, my grandmother, my uncle, my cousins, everybody. And, back then in the 70s and 80s, there was no helicopter parent. There was, you go to camp during the day. I'd walk from my father's place to like my grandmother's, and I'd have lunch, and then she would send me to go out and get a baguette or whatever it was. And, I'm taking the metro all over the place, walking on the Champs-Élysées, going to watch Bruce Lee movies, things like that. And so you become very independent, figuring out that metro map. And that my uncle and my grandmother and my father lived very close to each other in the 16th. So I could actually walk around a little bit, as a young person. And it was much safer back then. I think it was much safer. So you asked me about my parents' divorce. It became more independent, and I think that was a good thing. But on the other hand, I realized, I didn't really want that for my children. Whenever you have a marriage, there are always reasons. Every couple wakes up at some point and says, "Oh, this woman's driving me insane," and she just spent $20,000 on a dress, and she's ridiculous, and I can't. What's going on? How am I going to live with this? Right, that kind of thing. And you're thinking, what did I get myself into? Right. But the reality is, my wife and I have a very similar value system about the important things. And we also have, we figured that out beforehand. We were going out for a few years beforehand. I told you I met her, I don't know if this was recording before, we met her very close to here by mistake. But, if you set sort of the framework, or you set the ground rules early, these are the things that I think I need to be happy and successful. These are the things you think you need to be happy and successful. This is what we want in the future. And if you both have a similar view about the future, then a lot of things, day-to-day things can be easier. And so that's another thing I would not just say about being a father, but, if you're not married, you haven't worked through all kinds of basic life problems. It's hard. I have kids who are working for me in their 20s, and they actually have no idea, like, I don't want to say how unformed as a human they are, but, they can be very creative. They can understand the DeFi universe 10x better than me. They're, crypto native super duper this, but they're still, their personalities are on their characters are massively undeveloped. I'm not saying they won't or they don't have the capacity, but as a little bit of an older guy in the crypto blockchain space, it's like you have to deal with a lot. I mean, the average age is 28 of the guys in the space. So you have to deal with a lot of young people and know how to manage them. I can't say that I'm the best at that. I have guys on my team, other partners who maybe are better. I know what they don't know. I know what they need to learn. But I'm coming from such a different place that they can't imagine, really. And it is an effort for me, at times, because I'm thinking about the future. I have all these sort of big ideas about where the business is going. And then I'm dealing with, I'm dealing with like sometimes absurd like things from the younger guys, like absurd, like, a guy's girlfriend breaks up with him and he disappears for a week. I'm like, I'm like, what?
I'm not surprised. That's
And
the
I'm
new
like,
generation.
are you kidding me? What? He needs some time to manage himself or whatever. I'm thinking to myself, okay, I can't deal with this. I have one of my other partners, okay, I'm not saying I'm not completely empathetic, but give me a break. I mean, this is a serious person, ostensibly. You have to have your personal life in order. I was like, well, make sure you get your 8 hours sleep. Make sure you work out every day for an hour, and you'll be able to manage the vicissitudes of life.
Yeah, I mean, I'm kind of like in between this generation. I'm 33, but I also notice a massive difference between the people who are 45, 50, 55, 60, and like these 20, 25-year-old people who have like a completely different way of communicating. And in my businesses, I have the same kind of issue. I kind of feel old with like the values, right? I'm like, how is this person not even saying anything and disappearing? For example, simple things like that, right? I'm like, I can't understand that. But anyway, we sleep 8 hours so we don't get angry, and we go to gym when we are angry.
Yeah,
we go to gym when we're angry.
Yeah, if you just make sure that you're consistently doing it, I like, when things become habit, you incorporate them into your life, then there's no effort. I remember in my 20s, it was so painful. I would go down to this pool at the New York Athletic Club where I swim, and I would look at the lane, and I would look at it. I'm like, I can't go in. I always have to have a swim partner. I need somebody there to push me a little. And I would stare and like, I don't want to go in. I don't want to go in. I would sit there staring at the lane. But then some people would come, I would jump in, I'd do workout. And at the end of every single one, I would be thrilled. I'd be happy. I'd do my steam. And the importance is that once you make it a habit, just like going to the bathroom or having lunch, then, and there's no resistance,
It's not a question anymore. You just
No,
do it.
correct.
That's it.
I know these are basic things, maybe even some platitudes, but these are real things. I mean, this is.
That's how you build health. That's how you build wealth. That's how you build relationships. That's how you build businesses. You just do the same over and over again. It's boring. And when it gets boring, you don't abandon. You keep at it. Absolutely. It's boring, but that's how it works.
So I gave you a little bit about who I am, but I don't know if that's a good answer because that's only one little part, right?
We'll discover more of you throughout this next hour.
An hour.
This conversation is supported by Jupiter, the most used decentralized trading platform on Solana and the largest DAO in the world. Bitwise Asset Management, the crypto specialist asset manager with more than $10 billion in client assets and more than 30 crypto solutions across ETFs, index funds, alpha strategies, staking, and more. 3. A scalable layer 1 blockchain that's fast, secure, and affordable, built by previous Facebook developers, and that delivers the benefits of Web3 with the ease of Web 2. And Mental, an Ethereum layer 2 that built 2 products I particularly like. FBTC, which enables you to borrow and lend Bitcoin in DeFi, and METH or METH, one of the largest ETH liquid staking protocols in crypto. To support this show, please check the sponsors links in the description down below.
You have a high risk tolerance and love uncertainty. Where does it come from?
I have high risk tolerance I like uncertainty only because if there's no uncertainty, you'll not make any money, and you certainly won't have any success. So that's the problem. You have to be comfortable knowing that there's a lot of stuff you don't know, because that stuff that you don't know is what's keeping other people from, let's say, making the investment, if you want to specifically talk about investment.
And money.
Yeah.
Because success, because you said if you don't make money, success is defined in money terms.
Well, I'm a money manager and I'm an investment fund manager, and I've been doing this my whole life. So success can mean lots of different things, but within this context, and you are sponsored by Bitwise, which is a Bitcoin ETF company, and Bitcoin does have to do with money and value. And so, your audience should theoretically be interested in that. We're not going to necessarily be talking about like the perfect karma or, those
We can talk about
things.
Anything on this podcast. That's the beauty.
I know. But the reality is that if you go into something knowing 100% sure that you're right, the odds are that it will not be a good investment. You must go into it, thinking not where you can be wrong, not just where you can be wrong, but that you might actually be wrong. And what happens when you're wrong? How do you manage that risk? So, I think the two are together. That if you embrace uncertainty, you have to be comfortable with taking risk. And so I've done this for so long, so many years, that even like I'm unmoved by it now. Like there's no amount of, I think 25 years managing money now with my funds, with 1.5 billion invested in 23 businesses. We have 600 million alone in 4 companies. Those are big bets, but I'm not phased anymore. I mean, maybe I'm just older and I've lost a little bit of that crazy, when you're in your 20s and 30s, you have a excess of testosterone and everything else, and now you're older and it goes away. I don't know, but I'm not shaken anymore really by anything, because I've had a lot of, volatility and I've had a lot of failure as well, and then come back and had success. So you do that enough times, and it's very immediate. When you manage a portfolio, I was a global macro fund manager for many years, bonds, currencies, emerging markets, commodities in my portfolio, trading live every day. You see your P&L mark to market. There's no wiggle room. There's nowhere to hide. You either made the right decision or the wrong decision, and you have a daily outlook, a weekly, a monthly, longer than monthly outlook. And that rigor that you need to be on it every moment over time allows you to internalize risk and volatility and to manage it. And I think that's the, that's how uncertainty and risk come together.
What's the day that you learned what calculated risk meant?
Say that again? I'm not sure.
What's the day that you learned what calculated risk meant? What's the day where you thought you knew, hey, I know what risk management is, but actually, oh no, I didn't know that.
Yeah, I mean, that goes back earlier. I would say I had those kinds of experiences often before the age of sort of 35. Like, I think for me, between 22 and 35, a lot of learning, I'll tell you, I mean, early in my life, in 1994, I had a very big bet on Japanese government bonds, and in 93, and made a fortune in those. And then in 94, the market completely wiped out. 1994 was the worst year for bonds since the 1929. So it was the worst year in, whatever that is, 50 years. And many of the global macro investors, portfolio managers, got carried out or crushed in that 1994 year. Very difficult year. And thankfully, the position I had on was in options. And so I only lost my premium. But imagine this, in 1993, this is in my own account. This is while I was working at Tiger. I was up thousands of percent return, multiple thousands in 1 year in bonds, leveraged bonds. And in 1 week in March, I lost half of everything I made in the previous year in 1 week. So after that, I didn't really talk for about 3 months. I was completely shocked, and I misassessed sort of that, where the market was and the macro fundamentals. I ended up being right long-term because the market collapsed for the rest of 94. And then in 95, 96, 97, those bonds, went to basically zero yield. So they ended up, I had this view in 93 that Japanese yields would go to zero for a long time. And they were at the time like 7, 6, 5%. So it's a very sort of bold call. And what you realize is that you can be right on the long term, but I was completely carried out in the short term. And so that's and I learned that many times, maybe not to that degree again, but those kinds of experience inform my, risk management and my portfolio management style, even how the 10T and 1RT funds are managed. They're managed based on the idea of never being in a position to be wiped out or to lose enough that you can't come back. So I give up a little bit of the upside to have control of the downside.
Dear When Shift Happens family, the following message is probably the single most important thing you should take away from today's podcast. If you're serious about your crypto investing journey, please take some time to learn how to self-custody your assets to make sure that nobody can take your coins away, ever. If you don't learn how to be your own bank, it is very likely that one day you will lose all your hard-earned crypto. The safest way to hold your crypto is in a cold storage that we also call hardware wallets. Hardware wallets are not complicated and they give you peace of mind. I personally use a hardware wallet called Trezor. It is open source, very easy to use, and the first hardware wallet created ever. As we like to say it in crypto, not your keys, not your coin. You can order your Trezor wallet with a 10% discount by following the link in the description down below and by using the promo code WSH10. And now, back to the episode.
You mentioned 25 years career in hedge fund, macro, and now crypto. During these 25 years in the macro world, you worked with the top 5 investors of the last 100 years.
I think.
Steve Cohen, Druckenmiller, Julian Robertson, amongst them.
Yeah.
You sat for 10 years beside Steve Cohen, the famous hedge fund manager worth more than $20 billion.
5 years. I was there 10 years, but I only sat next to him for about 5.
What did you learn from him that you couldn't have learned anywhere else?
Believe it or not, I mean, one of the things is to keep it light if you can. One thing that is not generally known about Steve is that he's actually a very funny guy. He's on the trading floor often like telling jokes and things like that. Everyone sees him as being very intense, and the media had his personality wrong for many years. But, he has these little nuggets of wisdom that are these little sayings. I mean, I found him hysterical often, but when you're in a tense situation, everyone's competitive, to be able to loosen it up, to keep it light. But that's obviously just a fun little aside. Steve is, I think, considered by most people, and I saw it, sort of one of the greatest short-term traders of all time, and maybe the greatest. Long-term is different. I think he has, informed long-term views, and he's run, one of the most successful hedge fund businesses in the space. Some of the other famous guys have not been successful in running a business. He manages a giant business, and he's actually trading a lot less these days. But in terms of his ability to understand nuance and feel the winds changing in a very short term, there's nothing like that. So I learned from him a little bit how to trade short term. It's not really my interest, though. I'm much more longer term, big picture, macro. But it's valuable to be able to see the very short term as well. It's just not my natural style. we had a portfolio about $1 billion that we managed together for a little while. And I've mentioned this story before, but we were doing these little trades in the euro currency. And, normally I would take a bet and it was be multi-month view, or sometimes, usually it was a multi-month view. And Steve really got into sort of trading the euro. And at one point, short-term, medium-term, we had 19 trades in a row for profit in the euro against the dollar, which is, I've never seen anyone or heard of anyone, doing that. It's just, some was very short-term, some was longer-term, but he had a very good feel for, trading the nuance of a market. The other guys don't. The other guys weren't trading short-term that way. I mean, Stan Druck a little bit, and much more macro. But, if you do, what is the probability that you can trade 19 trades in the euro in a row for profit? I mean, it's infinitesimal. I don't know what the probability is. So and also look, I saw what kinds of things and metrics he used to make decisions, and there were some similar ones that I used, some different. And I saw each of the 5 guys who I worked with. They each had very different styles, and I was able to sort of pick and choose what I liked and what suited my style as well. You have a natural way, and you can't force it. You can't force another way. So you can augment your investment style with, extra tools from learning, but you may not, replicate their style completely.
How would you describe your natural way?
Well, long-term, structural, macro changes, world changes. I come more, from studying history and philosophy. My interest is seeing things out 5 to 10 years that will happen. And I write things. So, I think a lot of my views over the years I've written down starting in the early 90s. I have an investment memo type of framework. I studied history in school, so it's the same thing. You read a million things and then you write a thesis. And so I think the ability to write is one of the 3 most important things in being a successful investor. If you can't write, you can't articulate clearly your views are pointless, literally. That's another thing. Working for these guys for 20 years, I was able to be successful because I could be clear in why I had a view. And I would say, listen, this is the risk. We could risk $1. Over the next 6 months, I think we can make 5. Here are the 5 reasons. Boom. I'll be wrong if X, Y, Z happen. I'll be right if A, B, C happen. So clarity, simplicity, very important. But for me, it's that big macro structural change. And I started to see it in 2013. That was my first 13, my first introduction to crypto blockchain. And then, but I sort of stopped. I retired for a bunch of years in 2012 from active money management. And it wasn't until 2018, really, that I saw the opportunity and gave it the time and energy in crypto and the crypto blockchain space. And that, to me, is the single largest structural macro change in value and money in the last 1,500 years. I don't know. Much bigger than anything that I was involved with beforehand.
I think we both agree on that, which is the reason why we're sitting here today. You also worked with Stan Druckenmiller that you mentioned before. What did you do with him?
Well, I ran a portfolio independently. I also worked with him a little bit on his portfolio. But interestingly, Stan showed me that you could take a macro idea and turn it into a business. And so in 05, 06, I was very focused on agriculture. Excuse me. And there was a big bull market set off by Chinese demand for soybeans and the U.S. ethanol mandate. And I thought over the next 5-10 years, we're going to have a massive bull market in grains in '06. And I was working for Stan, and I said, listen, I have this idea. Not only do we have a bull market in grains, and we positioned very big in corn, soy, and wheat, but I've come up with a way to value farmland in certain parts of the country. And my valuation model shows that we can buy land today at 70 to 80% discount to where I think it will be in 3 years. So we came up with our own valuation model for land. This is me, a guy from Greenwich, Connecticut, coming up with something completely off the wall like this. And Stan was like, I love the idea. And we started a company called AgCoa in '06. And by 2013, it was the largest private holdings of farmland REIT, largest private farmland REIT in the U.S. 7 years later, we were partners together in that, along with the Goldman Sachs partners. We brought them in to help us execute the idea. And we sold that for $450 million to the Canadian Pension Fund System, CPP. And that was, we hired a CEO. He had a team, and we aggregated land in certain places in Nebraska and the Mississippi Delta, and the main innovation there was one innovative thought, which was that all farmland in the U.S. is priced for it's really more priced geographically than it is for its productivity. So land in Iowa, just as an example, which is the best quality dirt on the planet. They always say in Iowa, all you need to do is you spit on the dirt and your corn grows to, 280 bushels or whatever it was. And I noticed that if you went a few hundred miles west into Nebraska, where the dirt wasn't as good and was under pivoted irrigation, so you needed to irrigate it, you could have corn, a land that was producing the same amount of corn as the Iowa, but for 40 to 50% less. So land was not priced for its productivity and revenue potential, but it was priced geographically. Iowa was more expensive than Nebraska. Nebraska was more expensive than the Mississippi Delta. So, excuse me. So what ended up happening was that we ended up investing in well over 100,000 acres. And, I remember I was doing these calls every week or two with the CEO. We had a checklist of things about the property that we were looking for. And then we had the largest farmland broker in the country, Farmers National, out there looking for properties based on the fundamentals that we were looking for. And for several years there, 2009, 10, 11, we were the single largest buyer in the country. So I had a big picture macro idea. We wrote our 50-page, investment memo thesis explaining it very clearly. And then we went out and we turned it into a business. And one of the reasons why this is super important is because in trading, you're paying capital gains tax at the end of every year, short-term or long-term, but you're paying every year. Your portfolio, you true up, you get your P&L. So by paying that the trading, the capital gains, you're reducing your principal in a way. When you have a business, you start from zero, you sell it after 7 years. You get all the accrual without paying tax. You pay tax at the end when you sell it. And so as a trader and portfolio manager, this was like an epiphany to me that, wow, much better to use macro idea to start a business at zero and then have the gains accrue over time.
That's the main learning from Stan. One of the main.
That was specific to Stan. Stan gave me my confidence. I was 38 years old. I'd worked for Steve for a while, but Steve was, equity, short-term trading. It was not long-term macro. I was his sort of macro, his right-hand macro guy. Anything that happened in macro, he would ask me. We would sometimes trade on it, but it was not his main business. And I had learned sort of more of a long-term structural macro investment style working for Julian Robertson in the early 90s. That was really my first big job. And Julian sort of shaped the way that I've even today look at things. But, when you're young, your 20s and 30s, you don't have quite the confidence. Am I doing this right? Am I doing that right? I look at these indicators. I look at those indicators. I read these 50 things. Are they the right things to read? Well, when I went to work for Stan Druck, I realized that the things that I'd been doing were the right things, that my analytical framework, he validated. And so, I got along very well with Steve. Stan was a little more difficult for me personally. Your personality, you can't get along with everybody. But that was the most important experience for me. I mean, Julian first, and then Stan 15 years later, sort of validated my mental processes. And after that, I didn't really have doubt anymore about my skill. Around 38, took me 15 years to feel like I was commander of my universe.
I have a quote or two from Stan that I'd like you to comment based on your experience working with him and your experience as a professional investor. I like putting all my eggs in one basket and then watching that basket very carefully.
Yeah, I mean, I've heard that 100 times. It's exactly the same way that I invest. He would have a big view, and he would take outsized positions and just be all over it. The reality is, though, that his skill as a portfolio manager is sort of complicated to explain if you're not a professional money manager, because it's very layered. And he might have in his portfolio 50 different individual stocks and currencies and bonds and commodities. And they work together on multi-planes, and sometimes they hedge each other, sometimes they don't. It's like a beautiful thing to watch in motion. Much more complex in my portfolio. At the time when I worked for him, I didn't have that equity portion. And I was also maybe a little more active trading than he would be, because, when I'm trading, it was for hedging purposes. And so sometimes that wouldn't always make sense. But I mean, that's been my style, even with the 10T and 1RT funds I have now. I've put all my eggs in one basket, growth stage, crypto blockchain companies, companies making more than 50 million in revenue or so. But of the 1.5 billion, 700 million of it is in 4 companies.
That's a lot.
That's a lot. I know. So, and private companies, and and they have, they can be volatile. So I subscribe to that. When we did our Agcoa bet, it was the same thing. We had probably the largest position in the world at the time, between 06 and 08, in grain futures and grain swaps. So we had that big position. He had it on, I had it on, the firm had it on, and we watched it very carefully. It's not suited for everybody. Like Steve Cohen is the opposite. Steve has many, many little diversified bets, even in his own portfolio. Very rare that he takes a big bet. So like Stan, it's just a different style. Julian, on the other hand, was even more, had more appetite for risk than Druckenmiller. Now, Julian, it was just a monumental. When I saw that so early in my career, I was just like, how does someone survive that? But it was natural for him.
What's a big bet for you? You said out of $1.5 billion, for example, is that 10%? Because you mentioned 600 to 700 million is
In
across
4
4
companies.
companies.
Yeah,
So
that's a big bet.
do you have like 10 to 15% cap, or you don't even have a cap? I mean, you
No,
probably have
10
a cap.
to 15. No position can be more than 15% in the funds. But we do a lot of co-invest, and we also have 4 funds. So I don't put more than 15% of any one company into one fund. But normally, look, I'm one of the largest single LPs in the fund. I don't need to have, all the funds. I don't need to have all the exposure multiplied. So when I add it all up, I look at the overall portfolio, what the AUM is, and what my exposure is. And, the bottom 10 companies, for instance, are very small. We have in the top 8 companies is 83% of the portfolio. So I don't look at the bottom 5 or 6. I have other people looking at those more carefully. Why do we even have them? We have different reasons for different exposures. But, look, when you see something that's clear and you've done all the work, you want to have on as much as you possibly can bear.
Yeah, that's also what Druckenmiller says, right? You have to be a pig. But
Yeah, I'm not so sure about that one for me. I know he said that, and I heard him say it, and I know it, but that's easier said than done. I tend not to go that far. But that's why I'm not a billionaire.
you say when you're sure, right, and you've done the work, you have to not go all in, but make
Well,
a
you
big
can.
bet, right?
You can if that's your temperament.
But you also told me once, when I feel certain, I most likely lose money.
Yeah. Right. When I feel absolutely confident, and I'll tell you the time to sell, and this goes for everybody. You're in a bet a while. You have a view as to where it's going to go. It gets there, or it's get close, and all of a sudden in your mind, you start thinking about a new house, or you're thinking about a new car, something that you want to buy, or all of a sudden you start saying to yourself, you know what? I'm rich now. Okay? I feel rich. 100%, that's when you sell. When you are feeling the best, and when it somehow, you are like, you know what? I've worked years, I've suffered, I've had pain, and now I finally made it. If you don't sell, you will lose it all back, or lose a very big portion of it. That's my experience, having suffered through that, and I know the feeling. I mean, I know the feeling. I don't even have to articulate it anymore.
You know the feeling of feeling like that, right?
Of course.
Because I wanted to ask.
Yeah. It takes years. It took me 15 years of up and back, to know that feeling as natural as buying weakness is easy. Yeah. I see pain on someone's face. They're going under. I love the bet. It's easy to buy weakness. Selling is different because you feel so good. You're like, I did it. I bought the Bitcoin in here and now it's up here. Now, Bitcoin is different. Bitcoin you don't sell. So it's a different thing. It's a 20-year kind of thing. I'm talking about other, investments, or within the investment world. Yeah, I know. You feel good. Whatever it is, you go out on a date with a girl and you're feeling like, oh my God, I'm the greatest guy ever. Sell.
What if you don't have anyone to tell you that you're probably not going to listen to if you're not experienced enough, or you don't have...
Well, you lose the money.
How many times until you learn?
Many. More than most people can survive. What happens is most people quit. It's too difficult. It's too debilitating. And the reason this space is interesting, crypto, blockchain, it's 10 times, 50 times more difficult than everything in the old world, and much more volatile. And it's just civilians, people who are not professional money managers who've been doing this for 10, 20 years plus. They have no chance of survival. Their only way to survive, there's only one way if you're an amateur, is you buy it, you put it on a ledger, and you forget about it. And you can't think about it, and you can't trade it. You show me a young guy who's made some money in crypto and now he's trading, it's all going to go away.
100%.
Or 99%, right? And it's too bad, because it's too bad. But if you have the wherewithal to say, okay, it hit my target, I'm feeling great, I want to go buy a big house or whatever thing. If you begin to understand, even if you sell half, you sell some portion, and then you remember that feeling. I never got wiped out. You know, a lot of people get wiped out. I was always more careful. I never had any very big drawdowns. I mean, my worst year ever when I was managing a portfolio, I was down 4.5%, 5% for 1 year. That was my absolute worst year. But I also truncated my upside. I had 1 year where I was up 100%. I had a bunch of years where I was up 20 and 30%. But I was not a guy who would be up 300% and then down 70%, you know? And there are many guys like that, and they're very successful, but you need to have an investor base who's okay with that. And that needs to be your personality.
I invested a lot of money in Luna. I made at the top like $7 or $8 million and lost everything in 2 days when you crashed,
Of
right?
course.
And then I started to learn why all this risk management, the guys like Mike Novo, you, Raul, they come with their old school, traditional, investor mindset, and young people, they're like, this is boring, but actually there's no fucking way. Even Raul calls it, don't fuck this up, right? There is no freaking way you survive and thrive if you don't apply risk management.
Long term. Anybody can make a fortune short term. There's no question. Anybody. And I think that's part of the problem is that there are a lot of young guys who make a lot very quickly. Some of them have the ability to sustain and live through it. There are some, but it's just a very small number. And look, from the absolute peak in 21, our funds, the most one mark down was 10 or 15%. So Bitcoin, ETH were down 60, 70, 80%. The venture funds were all down 60, 70, 80%. I think if you go down that much, if you're down 80%, you go from 10 to 2. And then the next year you're up 100%, you're at 4. And the next year you go up 100%, you're at 8. I mean, it's very difficult to even get back to your initial investment. So you know that it's very basic money management. I don't ever want to be in a position where I'm so down where I keep making money and you have a high water mark too. So you don't get paid until, at least for me, all my investors get their money back. I don't make an incentive fee. So I structured our portfolio so that it will benefit on the upswing and then not be hurt as much on the down. But look, my view is if I get to hold my portfolio for 10 years, we can make a 5 to 10x. Now, some of our, portfolio companies, we're going to have realizations this year, but we are never shooting to make 30, 40, 50x. And the VC funds that make 20, 30x, they then lose 90% every 3-4 years. And that's fine. And maybe net, they end up making a lot more than me. But I sort of have a longer term, bigger picture view for what we're doing in this space. And I don't need to make that much. Yeah. Also, by the way, institutional investors, the space is virtually uninvestable for them with that kind of crazy volatility profile. So we have Texas Teachers Pension Fund. We have the Michigan Pension Fund, MERS. I have a New York City Union Pension Fund. I mean, with $30 million, $40 million, $50 million investment. They can't make a $50 million investment into a venture fund that then goes down 90%. It's not investable because of the volatility. So what we've said is, look, we're going to control the volatility by structuring the portfolio in a certain way. And it's to sleep well at night. You won't get fired, but you will have access to all the growth that's happening in the digital asset ecosystem. And that's been my view from day one.
Is this how you sold your school's endowment fund 1% in crypto? Is this how you sold them the...
Yeah. So, right. My prep school, I've been on the investment committee there I've been 16 years on the board. I'm finally stepping down in May. I'll continue being on the investment committee, but we were the first endowment, certainly high school endowment I'm aware of, to put 1% in 2019. And I said, I've been saying the same thing for 5 years. You can put your fund money into our funds. That's very nice, wonderful. But every investor, I say, you should have the same exposure. You should have Bitcoin, some exposure to Bitcoin, some Ethereum, You have a little bit of a venture fund and a little bit of a growth fund. And those 4 things, you can decide what % you want. But if you have that exposure and you hold it for 10 years, I will guarantee you will make money. I guarantee. I can't say how many multiples, I don't know. But if you go back to 2019, I did that for our endowment, and I was able to convince the other committee members. I also had some help from an emeriti, a guy who also went to the school, who I brought in to help make the case, because the guys on the committee were like, Dan, you're crazy. So I needed some help, to go into Bitcoin. And in the middle of 2019, we bought Bitcoin ETH, and we did a little bit of a venture fund. There was no growth fund. So we actually did 2 small investments in a venture fund. It was $5 million. And I think today that's well over 60 million for that endowment for that school. That's now 750 million, the total endowment. So we have 1%.
10% almost.
Yeah. I mean, a little less. Yeah. So I think
And it's
in
going
the
much
future,
higher.
what's that?
It's going much higher. You might get
Yes.
to 100%
No,
or 50.
No, we'll be selling before then, because it is a committee. I'm the head, but I'm going to be stepping down. The next people will be, deciding. They'll ask my opinion, but look, I think in the future, over the next 10 years, if you're not an endowment, or a pension, and you don't have exposure, I think your performance is going to be, obviously relatively problematic, but maybe you have your job is threatened. I think it's been the best performing asset in the history of the world. And I think over the next 10 years, now, with the new 50T fund we have coming out, our view is that Bitcoin goes 10x from here in 10 years. We'll hit $1 million.
When did you decide to go all in crypto? And
2018, 19.
why?
Well, so the market collapsed, as you remember, in 2017, peak, and it collapsed. And I'd seen that many times, where you'd have big bubbles and blow-offs and then a collapse. In the traditional markets, that happens all the time. And I thought, okay, well, Bitcoin was 3,000, 4,000, 5,000. I thought, well, it's either going to go to zero, and if it doesn't go to zero, it's the bottom and there's going to be huge upside. So as a trader, what you normally do is you start buying first. So I started buying at that time for myself. I convinced the school. I did other things. And then as you buy and your position gets bigger and it starts to work, you do more and more and more and more work. And, what I realized was that Bitcoin was many, many different things. A network, a new technology, a new system of value, so many different things. In fact, at the DAS conference just now, Michael Saylor spoke about his 21 points about Bitcoin. My original thoughts that I had and that I expressed in that 2019 interview with Raoul Pal that ended up getting hundreds of thousands of views. He has refined and expressed that 10x better than I did, and I sat there and I've heard him 50 times, but he keeps refining. He keeps explaining different aspects of Bitcoin that make it valuable and more valuable in his mind. And it's just such an excellent presentation. But look, I had a very simple epiphany. I was like, well, this is the only and sort of the greatest decentralized network ever built. At the time, I think Amazon was worth $1 trillion or $2 trillion or something like that. The value of Bitcoin at the time was 200 or 300 billion. So I thought to myself, okay, well, you have one company that sells stuff online that's worth 2 trillion. This is the greatest decentralized network ever built, never be built like to that degree ever again. it's got to be worth at least twice of Amazon. And so then that's part of the, at least. So that was my, my initial, I had many, many points along the way that, gave me confidence to go all in, as you say. But it was that initial comparison as an investment compared to other investments that I saw that it was undervalued. And so my risk, I thought, was limited. And I thought, well, wow, it could be much more than that. And I thought, well, where can it really go over the next 10 years? And that's when I came up with the name 10T, which stands for 10 trillion. And at the time, the total space had $300 billion of value. And I said, I think it can 30x in 10 years. And I said, no one will ever believe that that was my view unless I put it into the name of my fund. And so that's why, and today we're at 5T. 5 trillion is the value of Bitcoin, ETH. All the alts and all of the equity in the space, our sort of internal assessment is 5 trillion. So for our fifth fund, there's no way, there can't be 10T. It'll be one roundtable partners rolling out our 50T fund. Because I think 10 years from now, Bitcoin, we can hit 1 million, which is just really a 10x. It's not so big. Then that's 20 trillion. And then I have the alt coins will be 10 trillion. And then I think the equity in the space and anything that touches blockchain from a business perspective will be 20 trillion. That's what I think. All of the scaffolding, all the blockchain use cases, all of the integration of payments, everything you can think of, integration of media and NFTs and everything. I think that's another 20 trillion. So that's where I have 50T now, I think, in the next 10 years. We really accelerate, and it's now, we have the real catalyst for the first time ever, which is the Trump, the government change here.
How do you reflect your conviction in your personal liquid portfolio in terms of crypto?
What do you mean? I have Bitcoin and ETH, and I don't talk about it. I don't think about it. I don't ever, it's out of my mind. And
how much of that is that in your personal portfolio versus other asset classes?
Well, I have a pretty big exposure in the funds. So you have to be careful being too duplicative. I have my gold company. I have exposure there and some gold. But the reality is my exposure to this space, liquid plus the funds plus anything I do, it's over 50%.
And you're not planning to sell anything, even if it goes up another 5 or 10x, right? To rebalance or
no,
like
no. But the funds will self-liquidate. I mean, like we like for instance, we own Circle. Okay, so I will get money back from my investment in Circle, and but I will put that back into the space.
Can you explain the difference between the different companies that you have? So 10T, then you said one RT.
I thought you were going to ask about the businesses that we own. I was like, oh my goodness,
that's going to take
forever. Go through our whole portfolio. 10T, the first 3 funds were generally just growth equity. So the idea really for me was I wanted to get exposure to Coinbase in the private market. It was trading at around 6 billion. It was very difficult, very difficult. And then that was in the middle of 2019. And then as I was investigating, I thought, okay, wow, there are all these other interesting companies. I'm not a VC. I'm not in private equity. Why don't I just put together a fund with me, some of my friends, people from my network, and also the network of Michael Dubelier, who's one of my close friends and vice chairman of the funds. And, we'll raise 100 million and we'll invest in 10 of the, more developed companies in the space. I said, I can't compete with Andreessen or Polychain or Paradigm. These are the genius VC guys. I don't have a tech background. And so it was just supposed to be some exposure for me personally and some friends in these difficult to procure names. And it wasn't complicated at all. I mean, We did a lot of diligence, a lot of research, but it was a diversified portfolio, sort of like my farmland REIT, that was supposed to be leveraged to growth in the space. And each of the different companies, did different things. We had a Bitcoin miner, we had an exchange, we had a staker. It was just very straightforward. Then the space started to take off in 21, and there was huge demand. So we did 3 funds. The third fund had a bucket for metaverse, blockchain, gaming, NFTs, about 30% of the third fund. And that was just equity. So then in 23, 24, so we invested those funds. I wanted to invest. The bear phase came, and there were lots of opportunities. And it was very FTX really, in a way, killed the space, the growth space, because the outside investors who'd come in 21, the Thoma Bravos, Silver Lake, Tiger, Coatue, the Canadian pensions, they really all, have left the space and have not come back yet. So I wanted to set up a fund that focused on buying secondaries of companies in the space that we knew. And look, I have 11 board seats, a representation on 11 boards. So either observer or an actual board seat on 11 of our 23 companies. So I have direct access where there is no information. These are private companies. Like, some of them don't publish anything. So, I thought, okay, this is great. They're employees. There are VCs who need liquidity. I'm going to set up another fund, and we will buy the secondary stakes at these 70, 80, 90% discounts. And so that's the fourth fund. There were no growth deals. Like, in the last 2 years, there's only one growth deal of significance, which is Phantom, that Sequoia did with Paradigm. So you have to imagine, last 2 years, there was no growth deals. And then the fourth fund also does special situations. We had a company in the third fund that ran into difficulty and was put into administration. We ended up buying those assets out of administration, and we now operate the company. And we operate that business. It's called Zenrock, and that's majority owned by the third and fourth funds. But that's been a completely new focus for us. And we launched a product called Zen BTC, which will be the first decentralized yield-bearing wrapped Bitcoin. Now, no yield yet, but there will be yield. And we have developed a decentralized MPC. So it's the next level after multi-sig, MPC and secure digital assets. So the previous company, it's called Credo, they had spent 4.5 years building that tech. And so now we, took that company over and are operating it. And that's a skill set that we didn't have. You asked me, what are the differences? In the beginning, the funds, it was a relatively straightforward concept. Now, in the fifth fund, we'll have a growth equity bucket, early growth and mid and late stage growth. Then there's going to be a new bucket for growth stage protocols. So some protocols that are producing a lot of revenue. So again, trying to stay away from venture. Aave would be a perfect example. And we didn't own tokens in the first 4 funds at all. I mean, we did on the company's balance sheets that we invested in the equity. And I think this is really important now, because I've always believed that all value will be on chain eventually. I believe that. And I don't know when it's going to happen, but, whether it's the value of your house or whether it's, your stocks or whatever, it will migrate eventually all be on chain. But that is a very long process, and that is not going to happen overnight. But it's starting to be the case that there are legitimate businesses where the value and the revenues accrue to the token. There is no equity. So we have to invest in, we have a bucket, 15% of Fund 5 will be just in the tokens. And then we have another bucket, 25, 30%, which we won't call from investors until the next bear market. I'm I want to wait until the next bear phase so that we have a lot more capital to deploy into distressed and special situations then. Yeah.
How will you know it's a bear phase?
Well, that's what I do. I mean, you'll know too. You'll feel it. I think end of 26, 27, I think we go up to 180 on Bitcoin now. And then we probably get up into that zone, is my view, in the next 18 months. And then from 180, we probably go back down to 60. And then we go from 60 to 600. But that's 29, 30, you know.
You mentioned Phantom before.
Yeah.
I had Brandon on the podcast a couple of weeks ago. And you mentioned MPC. A couple of days ago, I had Steven from Arbitrum, who is one of the early researchers on the MPC technology. And we tried to explain that like in a simpler fashion.
Oh,
yeah.
Good for you. That's a complex
It's not easy.
idea of multi-party computation.
I was like, hey, the audience are normal people. You also mentioned NFTs before, and our mutual friend Raul Pal is a big NFT fan because of the art and cultural side of NFTs. You're very knowledgeable in old master paintings, so art.
Well,
right?
I wouldn't say very knowledgeable, but I'm some knowledge, yes.
You have some knowledge, you own a collection. Can you draw a parallel between old master paintings and NFTs?
No. No, because it's a totally different world. The old masters world has died. I mean, there's no real interest. Certainly no one under 40 years old is buying old master paintings. The prices don't move. Look, at the very top end, if you have a fantastic Rembrandt, it's worth a huge amount of money. Or you have there's certain paintings, but there's no, the young people have no interest. And my wife and I, when we buy something that's, let's just call it older, whether it's 19th century or, 17th century Dutch or whatever it is, it's because we really like the painting. And I think there's lots of quality painting to buy if you know what you like and you have an eye for something that is exciting for you. So we also have contemporary, we have, all sorts of different things. But NFTs, I think really more are about attaching digital value to something that's creative in the analog world. So it can be like music rights. It's the creator economy. I really believe in that. I believe artists should theoretically, every time one of their paintings gets traded, why not? Why shouldn't they have, 1% clip or whatever it is? So I like the idea of incentivizing the creator. Now, there are a lot of problem is, as within our space, there's so much garbage. There is so much garbage. There's so many, it's unfortunate, just, I don't want to say bad actors, but, nebulous players, and you yourself were hurt in this scam of the Luna. It's a scam. There's no such thing as an algorithmic stablecoin. It doesn't make sense. I know what a stablecoin is. It's a pegged currency. You can't be pegged and also move. I mean, I was telling people that, and they're like, no, Dan, you have to get invested. You have to. And I was like, dude, listen. I broke currency pegs, or I did trades where currency pegs for 20 years, okay? The Thai baht, the ERM crises. I know what a currency peg is. The Hong Kong dollar, I never broke. I'm just saying a stable coin is like a pegged currency. It cannot be algorithmic. It's an oxymoron. I'm just saying it's a scam. And there are scammy people in the space. And what I'm hoping now is that because the U.S. has sort of decided to make itself the crypto blockchain capital of the world, that we start to bring a little more legitimacy. And my view, and this is a very strong view, you're going to hear this from me for the rest of the year, is the way to bring legitimacy, the way to make the U.S. the capital, is to start to bring the private companies, and there are many of them, making hundreds of millions in revenue, billions in revenue, into the public arena, whether IPO, whether SPAC, whether M&A, on NASDAQ, on NYSE. I think Coinbase cannot be the only large crypto blockchain company that's public in the world. And 5 years from now, I guarantee 99.9% that won't be the case. I think we can have 40 or 50 companies public. And I think the American investing public wants to own businesses. Okay, you're not going to make America the hub by convincing people to own Chainlink versus Cardano or whatever it is. I'm just saying.
Or even buy Bitcoin and put them on a ledger, or
Well, maybe that a little bit, but that's not how you create mass awareness. The ETF and Bitwise and others have done a great job, and I think that's the first step. And people, the first step is you always have to buy Bitcoin, and then you learn about it. And then you say, holy crap, there's a whole world in the digital asset world that exists that I didn't know about. And there are businesses making fortunes. And so to me, if I'm the U.S. administration, I'm at the SEC, I'm, at NASDAQ, NYC, how do we bring these companies public? And the bankers are slow. Goldman, Morgan Stanley, they're not into crypto. Maybe they will be after we have a few IPOs and they see that they go well. But at the moment still, it's very thin.
Yeah, it makes a lot of sense. I want to have, as the crypto hub in the world, these companies on my stock exchange, so people from all over the world invest in the US, right? And realize that crypto is serious.
Also, one other thing is that to become public, there's a standard. It's difficult. So that's the greatest problem in our space is the trust. And, okay, you have Bitcoin. You don't have to worry about trust. But everything else, and I think there are lots of different use cases. It's very funny because I say to everybody, I'm a Bitcoin maximalist, but I also believe in a multi-chain future. So, because I don't think that you use Bitcoin for everything. You don't use it for buying coffee. In fact, you should never ever sell your Bitcoin. I mean, 10 years, 20 years, whatever it is. It's not, it has that pristine collateral, digital gold. I think that's its use. But there are a million other interesting use cases that will be applied to the general economy. And so it's just a funny juxtaposition of views, Bitcoin maximalist and multi-chain future. And I think the first step is to get American investors to own these businesses. And then these businesses will know how to allocate money into the space. Look, Kraken coming with Inc., right? Think about some of these things. Ledger with Ledger Live, right? 3 years ago, there was no Ledger Live. It was just a hardware company. These companies will pivot and iterate into the future.
What's the worst advice you've ever received?
Regarding what?
Anything.
The worst advice, well, the piece of advice that's most wrong, I would say that is given a lot, and that was given to me too, is that, when you hire somebody, you want to hire the smartest guy. Okay? Completely wrong. It's completely wrong. You don't need the smartest guy. You need the guy with the best values, with the greatest passion. So when I was young, I thought, okay, I do well in school. I'm successful. I'm this, I'm that. I'm very smart. You want to hire and have lots of guys who are smart around you. Or who is it? Bezos or some of the great billionaire guys are like, oh, I want to be the least smart guy in the room. I want to be surrounded only by smart people. So I think that's way overrated. Much more important to have passion about what you're doing and to have a good value system. I mean, unfortunately, it's hard. I mean, 2-3 times in my career, you hire someone who's bad morally, and it's a terrible experience.
What's a good value system?
Oh, somebody who, honestly, in my mind, I hate to say it, but sort of is a little bit of a gentleman, is a proper person who I think has humanistic values, who doesn't necessarily place money above absolutely everything. Like, very vulgar people out there, people who grew up with nothing. I understand they have that mentality. They need to grab everything from everyone. It's just, maybe they're the most successful. I don't know, but I don't need to live in that world. And I never have. And so, let me tell you, a bad value system, I would say you'll know it when you see it. Unfortunately, sometimes they're good at hiding themselves. It's especially problematic, in these very intense money-making areas like crypto, where it's an open field, and I love how open it is, and it's a little Wild West, and I love all those things about it. But with that comes some grifters, and you have to really navigate. Also, look, everything I do in my investment career, and especially now, is for my LPs and my investors. They're more important than I am. So I am a fiduciary for their capital. That is how you have to think. And a person who is morally problematic and greedy and this and that, they'll never put their investors ahead of themselves. But the difference is the investors in these funds are all my friends and people from my network, people I've known 30, 40 years. So all I care about is making them money. And anything that gets in the way of that, to me, is a problem. And my team now, today, as we exist, everyone has that mentality. It was not always the case. It has to be. That is the most important thing. If you go into the money management business, if you are an investor, you must be a fiduciary for your investors' capital. Your number one priority is to make them return. That's it. Everything else is your social life, your personal life, your hobbies. Don't confuse that with what your job is as a money manager.
Thank you so much, Dan, for doing that. That's a brilliant conversation.
Thank you. No, it was great.